We'll quickly take a look at the format of the profit and loss account too, which is shown, which is reflected in part 2 of Schedule 3 of Companies Act 2013. I repeat, the old one, previous schedule, was part 2 of Schedule 6 of Companies Act 1956. But now the formats have changed slightly, and we are discussing this as per part 2 of Schedule 3 of Companies Act 2013. Here also we have the name of the company, profit and loss statement for the year ended, as on year ended for a period of time. Particulars, note number. Like we said, all the details are given in the notes to the profit and loss account. Current year, previous year. Rupees may be rupees in thousands, in lakhs, or in crores. The profit and loss account starts with revenue from operations. What is revenue from operations? Basically, the income which is earned from the ordinary business activity. If it's a trading company, the sales activity. If it's in manufacturing and selling, again from the sales activity, the revenue from operations. Other income, if excess money, for example, has been invested elsewhere and some returns are received from that, that would be called other income. So we have a total which gives us total revenue. Next, all the expenses, materials, purchases, employee costs, finance costs, depreciation, the total of the expenses to give us profit. We have now another thing which says profit before exceptional and extraordinary items, so that we know the profit which has been made by the company from its normal ordinary activities of the business. There could be some exceptional or extraordinary items which are then reflected separately. There could be loss by flood. That would be a major loss. It does not arise as the loss is nothing to do with the ordinary business activity. Such a thing would be called an extraordinary item. So this is shown separately in the profit and loss account, so that investors, so that people, so that any person looking at the financial statement knows the profits from ordinary business activities. What we get is profit before tax. We put in the tax expenses and arrive at profit for the period from continuing operations. We also have another concept called discontinuing operations. If a major part of the business is being sold, is being discontinued, it is necessary that a person looking at the statement understands that this part of the profit will not be received in the coming years. In this manner, the profit and loss for the period is determined. We have revenue from operations, other income, total revenue, take the expenses and arrive at the ordinary profit. If there are exceptional extraordinary items, these are reflected separately. Similarly, if there is any profit from discontinuing operations which are going to be discontinued, such is also reflected separately. After deducting tax, the profit and loss account is the net profit, profit after taxes, is shown in the profit and loss account. There is also another concept. This too would be discussed at a different level, where earnings per share, the earnings, the profit divided by the number of shares, gives us the basic earnings per share. There is also a concept of diluted earnings per share, which as per law now has to be shown on the face of the profit and loss account. Diluted earnings per share would be discussed at a different level, at a more advanced